So hello everyone guys, and today I'm gonna give you a best trading lessons about order block in smart money concept. So all good screenshots and criteria for formation of order block are gonna be in my Telegram channel in a comfortable form that you can download it and use. So let's begin. Order block is one of the key concepts what a smart money trader should familiarize himself with. In simple words, it's average price in which major market players start trading. The zone where traders place stop losses to protect positions from potential loss. When the price reaches this area, many of them can be activated, which will lead to a trend reversal. On the lower time frame, order block look like a consolidation range. This is the last candle of the opposite color before the movement structure breaks. This is when new lows or highs are created. And when the price returns to this block, this is the very place where you need to look for the most cherished entry point. So let's begin with bearish order block and go step by step to identify it and trade it very well. So the first one point is need to buy liquidity update. So on the left side of the chart, we can mark the buy stops liquidity and we can see what this candle are capturing with liquidity. And afterward, the candle has a bearish takeover by this red candle. So we can identify this candle as a order block and mark it like that from the lowest peak to the highest peak. So this is going to be our order block, and the result of filling this order block is going to be the price reversal. So the bearish order block are the green candle after bearish takeover. Let's look at the additional criteria. Resistance zone test, it means we have another order block on the left side of the chart of VG, and it's get reaction from it. So this means it's a good additional criterion for the order block confirmation. And of course, we can see after the bearish takeover where we are a breakout structure, what means what after testing of our order block, the price will go down. If you want to open a good trade, you need to take Fibonacci grid and determine the 50% and lower of order block. It's the best way to enter from the order block and get a good risk ratio. For example, here we can place the deal like that from the beginning of the order block with a good stop loss on the 0.5% and place the deal to the capturing of the sales liquidity and get a good deal. And of course, there are a lot of other criteria what can help you determine the order block better, but I wouldn't tell about it in this video because I don't want to make it long. Maybe I can tell you in my Telegram channel or in our videos. And of course, when you want to open deal from the order block, you need to see the global trend. For example, here are 50-minute time frames, and we need to watch the price on the price trend on the 4-hour time frame, and we need to open a deal by trend if you don't want to lose our money. Of course, you can concentrate in every moment, but in the long distance it wouldn't give you a lot of profits. And now I will show you a more conservative way to place a trade. We determined 0.5 points of order block or to the liquidity capturing on the graph and place the stop loss above the order block. So it's going to be a very safe deal, which has a good percent of win rate. So let's repeat one more time. Order block is a impulsive movement with capturing of liquidity and after takeover on the hour side. So here we have a bearish order block with capturing the liquidity. We were a bearish takeover, so we can determine it with a order block and place this like that. And after that, we can see where we were a breakout structure. And I told you about breakout structure in the previous videos. You can see it on my channel, and it's another main factor of confirmation of our order block. And on the left side of the chart, we have PVG and we get reaction from it. So it's another confirmations. After that, we determine how percent of order block and place deal at the beginning, like that, with stop losses above order block or from the 0.5%. So, and bullish order block looks like that, but we need a bullish takeover and the red candle on this side. So it's going to look like that, but we need to change colors. We have bearish capturing of liquidity and bullish takeover. So the concept stays the same. So let's move on the charts. So let's move on the chart and look for real time. So let's move on the chart and look for real time trades. So on this 50-minute time frame chart, we have a good order block and we can see it here. But what to do in situations when the takeover were lower when our order block? You need to determine it by the top candle to the lowest. So here we can see capturing of liquidity, and after that, break of structure with confirmations of the three candles. So here we can place a Fibonacci grid, take the long position instrument, and place a deal like that, the capturing of this liquidity, and get a good deal. So we can take a long positions instrument, place the deal like that, with a risky stop loss on the 0.5% or above our order block, with a take profit of the liquidity pool on the top. Or we can go higher, place to the risk liquidity pool, and take our profit by par, for example, 30% here, 30% here. And if you don't close the deal or the risk meetings, your stop loss are already in the place where you can't lose money and you are almost in profit. So it's example of the bearish order block. We can see the capturing of liquidity in this zone. For the higher time frames, it will be one candle, but in the 50 minutes, it's about 3 candles. So we have captured the liquidity, the break of structure, as determine our order block in a conservative like this. So here we have the break of structure, capturing the liquidity on all sides, testing the FVG, getting reaction from it, and of course on the higher time frame it has a bearish trend. So we need to place our Fibonacci grid, determine our entry points, taking short positions instrument, and place our deal like that with stop loss above order block, and after that, in the higher time frame, place a good take profit, for example, like that, and get a good restructure deal with 8% profit. So let's place a trade on the future to see how it works. On my experience, here we can see the capturing of liquidity and testing the FVG zone. We have one order block with confirmations, and after that we can see another order block which also captured all with liquidity, and we are waiting to break of structure on these meetings. But in the past we can place a deal like that, and already we can fix 50% of our deal and get a good profit. But we are done in this deal, so we are gonna determine the 50% of our order block, wait for the capturing of our liquidity and break of structure. So if it's order block tested now order block, it's get a good confirmation for a good trade. So we need to place a deal like that, with stop loss. I'm going to place take profit like this. So we can mark 2 deals on the chart with a good risk ratio. So let's back in the next week and tool for our trades. So guys, thank you for watching. Follow my Telegram channel for more new knowledges. Drop your likes, subscribe my channel, and goodbye.